Kick-Ass Rock with Morning Talk.
On the radio.
Jeff and Jeremy in the morning, exclusively on 93.3 KZOZ.
Something that we've been waiting for a long time. The Fed came out yesterday, and according to CNBC, slashing interest rates, slashing the rate, dropping it down a 0.5%. So we can all buy a house again. We can all start racking up more on our credit cards. And we go right to Justin Stearns.
Yeah, which he advises against that. Don't start racking stuff up on your credit cards, right, Justin?
I do.
Justin's joining us from
I've worked with Justin before.
Loans.
And he's like, okay, you got to. This is what I love about working with Justin. He's like, okay, if you want to do what you want to do, and I've done 2 home purchases and a refi with Justin before. And he's like, okay, get this credit card down to this amount. Get this credit card down to this amount. Get this credit card down to this amount. And he's like, then you should be good. And don't do anything stupid like go out and buy a car.
I love it.
So which is good. That's
you want an appreciating asset, not a depreciating.
Yes, absolutely.
Asset, right?
Absolutely. Yeah. So what does this mean for your business in lending people money and doing refis?
Yeah, I mean, when the Fed does anything with rates, it's always big news in the headlines, right? So most of the questions that I get are in regards to the Fed funds rate changing and how does that impact the interest rate that they're going to get? And everybody as a consumer automatically assumes as a layperson that, the mortgage rates went down 0.5 point today. Well, that's not exactly true. Mortgage rates are based on bond prices and specifically mortgage-backed security prices, which bond traders are smart. They work ahead. A lot of the gain and tick up in the bond price, which means lower interest rates, by the way, is already there and has been there probably for a week or so because they've been anticipating this cut. But more important, I think, are the comments that are made than the actual cut itself because, like I said, those bond traders are looking to the future. And so really what happens here is we get more insight into what's coming. And it's not a crystal ball, but you certainly through the comments today, we're expecting another cut before the end of this year.
Wow.
And more to come in 2025. So the overall trend is lower rates, and we're going to continue to see that based on what they're saying. And that's good for consumers.
Jeremy, you bought a house. How long ago did you buy a house?
I bought it in May.
That's not a good time to buy a house. For somebody like Jeremy who bought a house in May, he's got a
Why is that not a good time to buy a house?
Well, no, I should say every time is a good time to buy a house. Like you should buy a house as soon as you possibly can, and then wait for something like this to happen, and then get a lower rate. But what would your advice be to somebody like Jeremy who is sitting? What is your rate that you're sitting on, Jeremy?
We locked in 6.6, and that was back. If you remember, the Fed had met. And we locked in at 6.6, and the next day it started going up, and it hasn't come down until recently. I think I don't know when the mortgage rate started to come back down, but it was over 7% for up until I think at least a month ago.
Yeah, a little longer than a month ago, but yes, rates have climbed. They climbed faster than any time in history. We got all the way up into the 7.5 range on an average 30-year fixed. They've come tremendously back down. I'm doing 30-year fixed rates in the 5s, which is way better and makes hundreds of dollars of difference on most people's mortgage payment. So, you at 6.6, we should definitely talk. I think there's an opportunity, but, everybody's situation is different. But the bottom line is, 30-year fixed rates hovering around 6% and slightly thereunder. Of course, your individual qualifications matter. And there can be some fluctuation off that as an estimate. But in general, hopefully we're going to see rates continue in the 5s and even dip into the mid and low 5s, maybe by the end of the year, definitely as we go into 2025. And it just makes things more affordable, makes housing more affordable. It's good for people. So
we're talking to Justin at Assist Home Loans, assisthomeloans.com. So for somebody that just got into a mortgage and, we're looking at the forecast of maybe what is to come with mortgage rates. There's a lot of fees when you refinance. So what would your advice be to somebody? Should we wait a year? Should we wait 2 years? before we're ready to start, looking at refinancing to try to get the best rate we can, because there's a lot of money and costs that come with refinancing. It's not like we just go, oh yeah, okay, it's down to 5.9. You're at 6.6. Let's go ahead and refinance it. There's a cost involved in that to the consumer.
It's an excellent question, and you should be looking at the cost break-even analysis of what does it cost me to reduce that rate, and what is the savings monthly, and how long does it take to recover the cost to do it. So in a nutshell, that's how it works. Rates and cost are like a teeter-totter. Think of a teeter-totter. If you're getting a really low rate relative to the average market rate, you're probably going to have to pay up front some fees to get it. On the flip side, if you're taking a rate slightly higher than average in the market that has yield, which covers the cost, you're truly paying nothing. And if that situation still improves your rate and there's savings day one, the cost break-even analysis is zero timeline. So it comes down again to your personal situation. I am always available for consultation for anybody that wants to look at their personal situation. But yeah, my advice would be to try to limit the cost, but improve the situation with a timeline to break even on that cost that's in line with how long you expect to hold the loan or the house.
We were talking with Lindsay and Patrick earlier about Google reviews, assist home loans.
Who's Lindsay? You mean Leslie?
Leslie. Did I say Lindsay?
You did.
I had a flash from the past. We used to work with a girl named Lindsay. We were talking about Google reviews, and Justin's 5-star rated and I think that's the only mortgage company that's 5-star rated in the area. So check them out, assisthomeloans.com. You can link up at the poll question today, and every day at kzoz.com. Justin's face is right there waiting to talk to you. Just give him a text or a call and he'll set up an appointment.
Absolutely.
That's Justin Stearns from Assist Home Loans, assisthomeloans.com. Don't forget, we got tickets to see the Cult today, 9:40, if you know the show.
Jeff and Jeremy in the morning on 93.3 KZOZ.